Hi, my name's Dan Toleman, and I lead Wood Mackenzie's LNG content in Asia. Today I'm going to talk to you about our long-term view of the LNG market as well as contracting trends. I hope this will provide a little bit of context for the PNG LNG project, including the base project that'll be impacted by near-term prices, as well as the expansion project, which will be impacted by contracting trends that we see for the late 20s period, as well as the 2020 price and kind of the market environment that we see there. Let's start with demand. Wood Mackenzie sees LNG demand growing out by 3.5% to 2040. After that, it slows down with the energy transition. A key part of this growth story is China, represented here by the grey. We see Chinese demand almost doubling out to 2035 before it slows off as renewable production picks up. It's the opposite story in JKT, with Japanese demand slowing, and this is slightly offset by rising demand in South Korea and Taiwan. The real engine room of growth is in Southeast Asia and Southern Asia. There is a large demand growth story coming out of Southeast Asia as domestic supply declines. And in Southern Asia, it's really about infrastructure unlocking that later gas demand. Marine bunkering is another area where we see LNG demand growing. In Europe, it's pretty flat throughout the entire period. This is our view of the LNG market balance. As you can see by this slide, by 2030, there's only 35 million tonnes of supply available for new projects. However, in the long term, if you go out to 2035, there's 165 million tonnes of available demand for new projects to get after. One of the key parts of our forecast is our pre-FID backfill. So this is filling projects like the Northwest Shelf and MLNG. If some of these backfill projects aren't sanctioned, there is possibly additional demand available for new projects that are working towards FID. If we go towards the earlier part of the forecast, the market is quite tight from 2022 to 2026, and this provides an opportunity for projects that are fast to market. If you can bring a project online in about 30 to 36 months, you can attract some of the higher prices that we see being available out to about 2026. From this 26 to 30 period, that's when we're expecting a lot of the 2019 FIDs and the recent FIDs to come online. So summing that up, there is quite strong LNG demand growth, which provides a little bit of room for projects by 2030. However, out to 2035, there's quite a significant amount of LNG demand for projects to get after. What projects are going after this demand? We've had the three that have taken FID this year: Barossa, which will backfill Darwin LNG in Australia, the Qatar Megatrain, adding 32 million tonnes of supply, as well as Baltic LNG in Russia, which was a little bit of a surprise. Elsewhere, we see Pluto expansion moving forward. The recent Woodside BHP deal removed some of the commercial complexity. Meg O'Neill's been announced as CEO of Woodside. As long as they can sell down 49% of the expansion train, we think that project will take FID this year. In North America, there's a lot of projects moving forward. Which ones that will go, there is some uncertainty around. However, we do expect over the next couple of years, 20 to 30 million tonnes to be sanctioned. These projects are quite quick and they can get to the market in that 24, 25, 26 period. To move forward these projects, there's a couple of key things that we're seeing operators do. First, securing financing, and then securing LNG contracts. Both of these are important. The leading contenders at the moment, Tellurian's Driftwood project, which has had quite a lot of marketing success, as well as Venture Global's Plaquemines project. Both of these could go forward in the early part of next year. In addition to these projects, there are two other large projects that could go forward in the 22-23 time period that are going to have quite a significant impact on the market. That's Novatek's Arctic LNG 1, which will follow Arctic LNG 2, and that's the Qatar North Field South project. That project there is a 16 million tonne project. Novatek's project will be another 20 million tonnes. So there's quite a lot of additional supply that could come to the market in the middle of the 2020s. And this is an important story for PNG LNG, as these projects are really cost competitive and they're going to bring quite a lot of additional supply to the market. This is our view of the LNG FIDs. What you'll notice in the 2015 to 18 period, there were very limited FIDs before we had the massive spike in 2019, and then again the drop off last year with only the one project going forwards. This year we've seen the mega trains as well as Baltic go forwards. In terms of what does this mean for new supply coming to the market? Well, there's going to be limited supply growth across the 21 to 25 period. And then we're going to see quite a large ramp up of supply as those 2019 and 2021 FIDs hit the market. There's a couple of different moving parts here. We saw some of the US projects come to the market earlier, so they're going to bring some new supply in the 22, 23, 24 period. However, there's also been a lot of delays. LNG Canada, Nigeria Train 7, Golden Pass, they've all slipped into a 2026 startup. We also think that Baltic LNG, whilst Gazprom's targeting a 24-25 startup, we actually think it's more likely to come to the market in 26, 27, and we've risked that. The other key story that's come out this year is Mozambique Area 1. Total there called force majeure, and the project has been delayed. We now think that it's likely that project won't come to the market until the back half of the 2020. So either a startup in 28 or 29. There's a lot of uncertainty there, and that could come forwards. In terms of prices, that means that the LNG price is going to be quite strong through this period of 2022 out to 26. Let's move on to LNG contracting, because we're seeing quite an interesting dynamic in the market at the moment where spot prices are above contract prices. And I think a lot of people will be following this, and you can see their spot prices are above US $16 a MMBTU. And if you calculate an oil link price, it's quite far below that. Longer term contracting, it's declined since the start of the decade. In the $100 oil days, we had a lot of long-term contracts being signed. That's dropped down and it's continued to fall. Now, last year, with the uncertainty of the pandemic, we expected there to be quite a low number of LNG contracts being signed, and we again expected a rebound. So what we're seeing this year is more contracts have been signed than last year, and we expect it to be around 2018, 2019 levels, so around the 25 to 30 million tonne mark. At the moment, most of the contracts have been in the 5 to 10 year duration. However, we could see some longer term contracts being signed by some buyers in the market. Another interesting dynamic that we're seeing is the change of portfolio versus project contracts. Project supply, represented here by the light blue, used to be quite strong, and there was more portfolio supply. What we're now seeing is a lot of companies are choosing to market on a portfolio basis rather than a project basis, and they're using their portfolios to gain a trading advantage. This could be quite important for the PNG expansion, as some of the parties involved might look to go for a portfolio supply rather than point-to-point contracting. What also could be quite important for PNG expansion is where the long-term LNG contracts are. At the moment, we're seeing contracts being signed linked to Brent in the low 10s. We've normalized this to have a 0.5 constant, but at the moment, most contracts are being signed in the low 10 with a low constant. So it might be 10.1, 10.2 with a 0.2 or even a 0 constant. If we go back through time, the second half of the 2010s, most contracts were typically signed around the 12% mark, and earlier in that decade, around the 14, 15% mark was quite common. So we've really seen contracts come off, and there's a reason for this, and it's the amount of long uncontracted supply that we're seeing in LNG players' portfolios. A couple of key companies here that have the long uncontracted supply. Qatar, they've been one of the busiest companies in the market at the moment, and they're signing a lot of deals. And there's a reason for that. It's because they've got such a long uncontracted position. In addition to this, we see Petronas and Novatec with long uncontracted supply positions, and also Naturgy. So this has had quite a big impact on the market. To sum up, we see the prices being quite strong through the first half of the 2020s out to 26 before supply growth catches up to LNG demand and we go back into oversupply. And we're going to see a period of weak prices through 27, 28 before that demand growth catches up again. In the long term, LNG demand is still robust and there's still an opportunity for projects like PNG expansion. We're also going to see the base PNG project make a lot of money in the short term based on the volumes, the uncontracted volumes that'll be able to achieve what we think will be quite strong spot prices through 2022 to 2026. Thank you for letting me speak at the conference. If you'd like to know any more about the global LNG market, please feel free to reach out.